there was, as evidenced by the move we're seeing right now in the stock, a lot to like in this report. But is there anything here that worries you or you found disappointing?
Actually, I'm surprised to say no. I mean, they really hit everything exactly how we had hoped. And after watching Samsung's numbers, we were a little curious to see if they were just taking share or was the phone market really dropping. And what we're seeing is really the phone market is steady, and Apple's continuing to hold its position and grow its ASP. So really, I think the biggest issue moving forward for Apple is sort of what's their next big thing, you know. But other than that, I mean, they're doing a wonderful job in services and other products.
And I want to dig into valuation, but first, David, also as a shareholder here, I want to get your take on the report as well. Was there anything that concerned you?
Boy, there are so many things to like. Actually, in my mind, the biggest negative was I was hoping that they would buy back even more shares than what they did. I think we're starting to realize that as big as this trillion-dollar company soon to be is, there are some days that the liquidity just isn't there, and so that's a first-class problem to have. But it was a sterling report on many fronts.
And David, there's been a lot of debate about how to value this company. Is it a tech hardware company, given the fact that it's growing its services business? Should we be paying more attention to that? Some folks have called it a consumer company, even a consumer staples company. How do you look at it, and is it valued fairly?
I think we got to take it a couple of steps further. I don't know very many people who leave their home without their smartphone. And there's so many things a smartphone can do now. It's really morphed into I would call it almost not a consumer staple, but almost a utility, maybe even an unregulated utility. And to take that analogy a little bit further, think of it as an unregulated toll road or a toll bridge. And in terms of the valuation, I think it should have a consumer staple multiple. You put a 20 multiple on the earning power of Apple, where we think at the end of calendar 2019, not fiscal 2019, but the end of calendar 2019, with some pretty aggressive share buybacks, you're going to be looking at earnings of around 14.5 on its way to maybe 15. Put a 20 multiple on that, you got a $300 stock.
Hey, Ross, we had a discussion this morning about whether or not they should be a little more aggressive on getting into accessories or pricing the accessories they do have. I know you've made the point. The car continues to be an area where we're still looking for something new. Obviously, there's been challenges in getting a speaker that's competitive. What do you make of all those so-called negatives?
Well, I think you're hitting the exact problem Apple has right now. Is they're hitting it out of the park today, but what about 5 or 10 years from now? As investors, we're not planning on selling our stock, so that is the concern. So, number one, if I was CEO of Apple, the first thing I would do is buy companies like Sonos is going public very soon. I mean, this is a very attractive company. Control 4 is a wonderful addition to the home business. And then on the car side, how Apple hasn't taken a stake in Tesla is going to go back in history as one of the biggest mistakes in Tim Cook's career. So this is an opportunity for Apple to buy maybe 10 or 20% of Tesla and ride the car wave. But getting the iOS system into the Tesla screen on the car has tremendous potential. So we really think that Apple has to start thinking about the future. They're spending a ton on R&D. Right now, they're hitting it out of the park completely. With everything that they're doing from the past, but it's the future that we're really starting to focus on.
David, on this idea that Apple maybe economically should look something much more like a for-profit utility without price controls or even a consumer staples business, Apple's in that odd position where this great recurring services revenue does not necessarily come with higher margins than its original core business and hardware. I guess that'd be maybe one bit of pushback. And another would be maybe once Apple stops making a big deal every couple of years about the new fancy handsets they're coming out with and makes kind of a big splash about technology innovation, the market can start to assimilate this idea that they're no longer so hit-driven.
Yeah, you know what? My understanding, I'm going to maybe take the other side of the premise of your question. My understanding is that their services business has higher margins than their corporate average. I mean, I think we're used to a lot of software services companies that don't generate a lot of profitability. Apple is the rare exception, and because of those high margins, that allows almost a pricing umbrella, if you will, to maybe offer a little bit maybe lower cost iPhone. And so when I look at the totality of the stable level of average selling prices of the iPhone, a services business on a run rate of getting to 50 billion in the next year or so, and corporate margins, I mean margins of the services business higher than corporate average, I think you make the case. It's got to be a high teen. It's got to be a low 20 multiple. And even if Tim Cook even mentioned on the call, even if the iPhone units isn't growing so much as it did a couple of years ago, it's still a gigantic generator of cash flow that helps fund other R&D elements of the Apple story.
Before we let you both go, and Ross, I'll start with you, given the fact that you are an investor in Apple, are you a buyer today?
Well, yeah, I'm not actually buying today, but I would be a buyer of Apple with new money here because I just think at 19 times or 18 times, I think David is absolutely right with his analysis of the potential. And I would ascribe an even higher multiple on the services business because he's right about the higher margins. And it's a subscription business with a moat that's huge. So, this is a great company. It's our number one holding. I mean, it's just Teflon. I love it. I'm super happy today.
And quickly, David, you?
We're not buyers today. We've owned it continuously since 2005. But I will say we only own about 20 stocks, and Apple is our largest, almost a 10% weighting in our portfolio.